Good afternoon, everybody. Good afternoon, and welcome to the Pulse Monday Market Update, number 199 for Monday, the 13th of October, 2025. I hope you're all well. I hope you've enjoyed an interesting weekend after those eventful market moves of Friday. There's plenty for us to talk about here today. As always, you are very welcome here. It's just useful for those of you joining us in the live. If you can just confirm that you can hear my voice and see the slides, that would be much appreciated. I had a few tech faffs, so always good to know that things are working. If you're watching us or joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can fit in the next 25 to 30 minutes, looking at the strength and weakness within FX indices and commodities markets, looking at a few charts of interest, and then having a look at the live markets. It is not a signal service. It's not trade recommendations. It's just me sharing what I'm looking at, which might be of benefit or help to yourself. As always, you are very welcome here, but just remember that you're always responsible for your own trading decisions. And if you want a little bit more education this afternoon, I will be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. Today's session will be all about how to trade gold, which is probably pretty relevant based on what's going on in the gold markets at the moment. You can either sign up for that on the Active Trades website or use that QR code. And if you want a little bit of help and support, for your own trading, you can join the VTP Trader Accountability Group, which is just all about helping build discipline, accountability, and consistency in your trading. There's a bit.ly code you can look at there, or the QR code, or just ping me if you've got any questions. Okay, all right. Let's dig into the STAM. So, if you're joining us for the first time, or if you're new to trading, this might maybe looks a little bit overwhelming or intimidating, but it's not there. It's just snippets from my own weekend work that I do on my own model, where I'm looking to identify where's the strength, trend, and momentum, primarily within FX markets, but also within indices and commodities markets. So, what is this telling us, and how can we use it? Well, we are into week 42 of the year, just 10 weeks left of the year, ladies and gentlemen. All right, and where's the strength and where's the weakness? What we see is Swiss franc, remains top of the pile along with the euro. What we have seen is sterling has kind of moved its way up to third, but it's not necessarily due to any particular strength in the sterling. It was more a case of, we just saw a weakness in the Japanese yen, and particular weakness in the Aussie dollar, and a lot of that Aussie dollar weakness was basically around about the events of Friday in terms of Trump threatening with his putting on 100% tariffs on top of the already existing tariffs for Chinese exports, etc. That sent markets into a meltdown, and they basically melted down across the majority of asset classes. But it's funny enough, I was talking to friends last week, and last weekend and stuff. The weekend just gone, about how we're getting used to this in terms of Trump comes out, says something, markets collapse, and on the Saturday, the other side of that Trump tariff tirade gets to have their say, and then on Sunday, Trump normally comes out and says something to kind of placate markets and smooth ruffled feathers, and that's that playbook has worked for him once again this weekend when he came out last night and started talking about actually how things will be all right with China, etc. So we saw a bit of a relief rally there last night into this morning. That explains why you've seen Aussie dollar here this morning, a kind of risk on, with Swiss and yen getting sold off now. I'll be interested to see whether that plays through. Of course, today is a bank holiday as well, in certain parts of the world, so it might be a little bit dull this afternoon. But nonetheless, there's clearly going to be some volatility based upon whether people are sort of kind of start trimming their risk, or basically start adding to their risk because they think that was just a storm in a teacup and will fly back to new highs. we'll look at the live market in a moment anyway. We'll get an idea of that. But when it comes to sort of looking at FX, well, dollar had one of its best weeks for a long time, okay, and it's bumped its way up to fourth place there. So we'll look at that in a little bit of a while. Kiwi remains bottom of the pile. Japanese yen, okay, as I said, dropped there a little bit. Partly because of the election last week means that any sort of rate hikes are getting pushed out. So invariably that kind of pulls the rug out from underneath any kind of yen strength, and that's where we've seen it fall. As I said, sterling's in the middle of the pack, and that is kind of confirmed when I look at the kind of STAM within sort of sterling pairs. Okay, it's a mixed bag of no STAM, some in buying sterling, others in selling sterling. What I want to see is want to see it when it's basically all like that, when it's kind of selling, or when it's all like that, all buying, etc. When it's mixed, well, then it tends to lead to kind of mixed outcomes. And interestingly, on my kind of intraday trading and stuff, it flows through into that as well. When we look at the indices, well, those of you who join us weekly, remember last week, most of this was pretty much all green last week, okay? And I did say last week, everyone's getting a bit happy, everyone's getting a bit giddy and excitable. Well, by the end of the week, it had changed and changed quite considerably, and we'll look at that in a moment. But, what we can see is that Dow and S&P have gone into tactical shorts, all right? DAX remains a strategic buy, but what I can see here is that look at all those weekly candles. We're going to look at that, okay? All of those weekly bearish candles, whether they be mixes of engulfing candles, key reversal candles, momentum reversal candles, doobies, etc. All right, so we saw that, and we'll look at that in a particular in a moment. Oil remains on a strategic sell, and that will have only accelerated after the sort of kind of first stages of the kind of peace deal for Gaza. That's had that effect. VIX last week, which was all green, has now gone all bearish. And as I said, we've got bank holiday today, but also we've still got the kind of the closure of the US government, hanging over us and stuff. So there is some data coming out this week, but it will be certainly none of the data coming out of the government at the moment. Okay, so we will have to wait and see how that kind of knocks on. Certainly, there is a bit of UK data. So for those of us who take an interest in the UK and who trade sterling, etc., we've got jobs numbers to tomorrow morning. Okay, we've got Bailey speaking tomorrow evening. We've got UK GDP on Thursday, and then Bailey speaking on Saturday as well. So they've clearly got me in to say some stuff at the weekend to basically prop up sterling and gilts in the run up to the budget. So that's what we're looking at there. So bit of a mixed bag. Naturally, there's ripples after Friday. Watch and it's a little bit of a case of watch and shoot this week, because not only have we got government data, we've got the trade war, we've got all that element. We also are into really starting to get into earnings season. Okay, and there's an awful lot going on, and we'll look at that. We'll look at that now. Okay, so here's the charts of interest. As I said, I always put up just a few charts of interest of normally either kind of stocks or ETFs that I'm either watching or I'm engaged with, or that we can learn from. So this is Jefferies, okay, Jefferies Financial Group. Why are these of interest to us? Well, they're the ones who've been linked to sort of, there's been a collapse of, I think it's called First Brands. They were like... First Brands, they're kind of like another version of sort of Halfords. You've heard me talk about AutoZone in the US. First Brands was a company that had basically involved in automobile in terms of basically souping up your car or buying stuff, etc. And they had gone through a sort of a rather aggressive expansion, and invariably, as the kind of, let's say, as the cost of living as interest rates, etc., as a whole host of other elements have kicked in, so has of course that caused problem for First Brands, and we saw them go into Chapter 11 last week. But invariably, a lot of their funding came through Jefferies and a whole host of other banks. And I think what this is I think this is I think this is a tip of the iceberg moment. Personally, all right, I think that when we also see some of the data come out of some of those kind of subprime car loan companies that are also going belly up, I think we're going to sort of see that there's something rotten in the state of Denmark, and by that I mean kind of subprime loans, etc., or a version of them. All right, so we will wait and see. But ultimately, all I'm interested in is, right, where's the opportunity? Well, as you can see, Jefferies here, okay, like pretty much a lot of the financial companies we're going to look at today, had been doing pretty well, had been in a really nice uptrend, okay, pulling back to its 20-period moving average and bouncing off it really nicely, okay, working its way up. But interestingly, up to $80, big round number. And then what happened here, we printed, that's a bearish engulfing candle, it's a bearish key reversal candle. Then what happens is a couple of weeks later, bang, all right, okay, as we come into the start of the year, we get another big bearish engulfing candle, bearish key reversal, all right, at a big round number, two of them. All is not good there. And as we can see, once we broke that 20-period moving average, which we hadn't done for a good while, for a good couple of years, you can see basically we dropped what supported us, 200-period moving average, and we clawed our way back up above $50. But then, as you can see over the last week or two, clearly as the sort of First Brands went in, and as actually people start to look at where's the collateral damage, well, clearly Jefferies was facing it, and you can see it's dropped from $70 to just a nudge above 50 there. What we've seen over the last couple of days, of course, is like the CEO and lots of the kind of at the board at Jefferies coming out saying, oh yeah, well, actually, yes, we are exposed, but it's not going to be that much, maybe 40, 50 million at most. Perhaps, maybe, we'll see. But then, you would expect the board to come out. They're not going to come out and say, oh, Jesus, we've screwed this. Then, they're going to come out and sort of try and, calm the fires, aren't they? So, but the ultimate thing is, the price is the price. Look at that over the last couple of weeks. You've dropped from 70 to 50. 50 is clearly, I think, like a line in the sand. And what you're looking at is, will there be contagion? Will there be a run on this stock? Will basically just complete, risk sentiment, especially with what's going on in terms of financials, earnings this week, and the events of Friday. Is this enough to basically just, pump or dump rather Jefferies through 50 and beyond? So this is definitely on my watch list. Okay, and we'll be interested to see how it pivots around 50. Does it hold as support, or does it go through it like a knife through butter down to 45 at the 200? So yeah, I think that, as I said, I think it's the tip of the iceberg for the story for all of that kind of automobiles in the US. So yeah, watch this space. Okay, as I said, we're getting into an awful lot of, well, A, it's the start of Q3 earnings season. B, there's an awful lot of finance companies this week, and in particular tomorrow. And one of them is BlackRock. You've also got JP Morgan, Goldman Sachs, Citi, Wells Fargo. We'll look at later. You've got Morgan Stanley on Wednesday. All right. Okay. So I think Bank of America or Bank in New York on Thursday. I think I might be wrong on that particular one, but anyway, a lot of those finance companies, and as I said, it's kind of interesting to sort of to see what we can see here. This is BlackRock, and I always come out with the full disclosure that I've got family cousins who work at BlackRock and stuff and what have you. So that does not in any way give me any insight into a company that is such a behemoth as BlackRock and stuff. I'm just making my decisions on what I see. And as I've said, like most of those finance companies, for the most part, they've had a good couple of years. Yeah, there was a bit of the sort of tariff tantrums earlier in the year, but we recovered from that pretty strongly. And we're grinding our way up. Still making kind of higher highs, higher lows, etc. We talked about some of those finance companies a couple of weeks ago about how they were sort of just kind of maybe putting in a pause. But then once again, last week, okay, this is what I'm seeing from BlackRock. Now, admittedly, some of it because of the Friday's shenanigans, but also, as I said, we've got earnings tomorrow. That's printed. BlackRock's printed on the weekly chart. A really nice bearish engulfing candle. It's a bearish key reversal. Price pushed to a new high, then closed at a new low. So is this a case of, I'll be watching BlackRock's numbers tomorrow? They're out. I think they're out tomorrow before market opens, etc. If those numbers are poor, is it a case of that confidence is febrile? And actually, what happens is we start seeing price break down to around about that $1,100 area where the 20 would be moving its way towards. That's what I've been looking at. Okay, at the moment it's still floating quite high, quite nicely. But if those numbers need to be good tomorrow, all right, those numbers need to be good. And if they're not, I think, yeah, as I said, where we start to kind of work our way down, here's the V before the I, into that kind of 1100 area and stuff. So yeah, add this to your watch list, all right, to see how this plays out tomorrow. Okay, one of the other companies is this week. Okay, is WFC Wells Fargo. Now, Wells Fargo, yeah, kind of the trend as we'd seen, maybe not as pretty as some of the other financial companies, but listen, grinding away. Okay, and it recovered from the sort of the trade war early in the year. And as I said, maybe not as pretty or as clean as strong, but it had been grinding away. But then what I'm looking at here is on the weekly chart. To me, this is, we pushed to this high, but then we have printed that is it's an evening star formation, which is a three candle bearish formation at a top. And then what we did last week, okay, whereas we just looked at BlackRock and it only really printed an interesting candle last week. Last week, what we did is we closed beneath $80 and also beneath the weekly 20 period moving average, which we have been above for most of the last about 5-6 months. So I'm intrigued to see, well, all right, once again, if those numbers are poor, do we get a little bit of a relief rally this afternoon? All right, or over the sort of the short period of the next 24 hours. But then if those numbers are poor, does that then drop us down to the 50? And if it is 50, do we get beneath it? If you look at the 50 there, it's acted as really kind of nice support there, hasn't it? It's beautiful support there. Just bounce off the 50 is a very simple, easy way to basically be, long, well, but long any long asset class. But I wonder whether we're into this particular area here, based upon, as I said, the fact that confidence will be a little bit febrile at the moment, okay, and we shall see how that plays out. But once again, yeah, just watch it. As I said, I think that's leading, as opposed to BlackRock and a few others which are holding up. I wonder whether if Wells Fargo is the leader in that sense. Yeah, and then if we look just generally, just to finish off before we look at the live markets, if we look at XLF, which of course is the ETF for the financial sector, well, I'm intrigued by that as well. All right, as I've said all along here, most of those finance companies and the ETF had a pretty nice strong trend. There was a really nice bearish engulfing candle there, wasn't there? A lower high right into the trade wars, and then it reclaims the 50, then it reclaims the 20, then it kind of reclaims $50 and it grinds its way higher. But then the last couple of weeks, there's lots of wicks to either side, and then once again, last week XLF, it closes beneath the 20 period moving average, and you can see where it's acted as support and then resistance. Okay, I'm going to be curious to see, well, all right, we've got an awful lot of, as I said, financial companies with their earnings this week, and what will XLF look like by the end of this week? If those numbers are good, and we get some Trump shenanigans, then do you know what? Maybe there's the power to push it to the highs. But if some of those numbers are weak, and if some of the kind of confidence ebbs away, and perhaps some of the as I said, the trade war, Trump tariff shenanigans carries on, do we roll over to the sort of 51 area? Okay, where the 50 would be in a couple of weeks. So I'm hoping that you've got an impression that it is going to be a very interesting week for financial companies and generally the markets in general. So you might want to add these to your watch list and just sort of see how they play out over the next few days in the backdrop of everything that is going on with generally with markets and with Trump and the Chinese, etc., and the US government lockdown. Okay, so it is an interesting October. All right, so there you go, ladies and gentlemen. Some charts of interest you can take away and take a look at. Let us switch across to the live markets now and see what's going on in the indices and commodities and FX markets. So if you'll just bear with me for a moment, let's switch across and see what's going on. Okay. So here we are. I'm hoping that you can still all hear me. I'm hoping that you can still see me. We're here. This is my kind of like indices profile. What have I got here? Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX on the weekly, oil on the weekly. As we can see, oil has basically drifted beneath 60. No surprise, we talked about that last week. Come back up to test it. I'll be interested to see how that plays out. But really, I think the more interesting element is the fact of what we're seeing here. Nasdaq, what did we print last week? That is a kind of a bearish engulfing candle, key reversal candle. Same with the S&P 500. Okay, same with the Russell. We printed, bearish engulfing candles. Yep, it was a very bearish candle there as well. I'd call that a doobie there on the Dow. Now, admittedly, some of that is because of the sort of shenanigans we saw on late on Friday. The question is, does that signal that maybe the start of a drift, or is this just a little bit of a flash crash? And by the end of this week, everybody's happy and giddy and excitable again. Have to wait and see. I can't give you a definite answer on that. Certainly, there's been lots of people buying up cryptos and dips over the weekend, but we shall see how that actually filters through into the actual American market, into the actual stock markets. Okay. I think people want to, and certainly if you look at the kind of electronic contracts, all right, okay, the electronic traded contracts, you can see that basically they kind of gapped up there. A lot of that, as I said, was down to Trump's comments last night or his tweets, etc. On that, the question is, will there be follow through? That's what we want to see. If there is, well then, there is such madness and giddiness that it wouldn't surprise me if we pushed to new highs. But if there isn't, or if let's say more kind of underhand financial shenanigans in automotive and other areas starts to come to the fore, well then does it sort of take the wind out of the sails of confidence and sentiment? Confidence sentiment, the same thing. So I would just be watching this. Okay, it is going to be a very interesting week, ladies and gentlemen. It really is. And if we just look at even at S&P 500 on the daily chart, it's been in a great trend, and we've talked about it, haven't we? We've just basically talked about it, working its way, grinding its way up, and that was Friday's bang, and we closed beneath the 50, which we haven't been for a long, long time. But then, as you can see, the electronic contract trend, we gapped up there, okay, into the start of today after Trump's comments. The question is, will there be follow through? That's the thing. All right, that's what people will be watching over the next 24 hours. I'd suggest to see how that plays. If we look a little bit closer to home, FTSE, FTSE continues to work its way higher even after Fridays. All right, that is still an uptrend. Okay, that's still working its way. If we look at the daily chart, it's not beneath the 20 or beneath the 50. Okay, yep, it's come off, but we'll have to wait and see. I think the interesting thing is, of course, FTSE 100 isn't really reflective of the UK these days. All right, okay, it's more reflective of of international markets, and what I do think is maybe holding back from racing like we've seen with DAX and others is because, of course, there's very little confidence in Reeves and Starmer, and everybody's kind of just sat on their hands a little bit, I think, until the 26th of November. I mean, and that is, what's that? That's a good 6-7 weeks away and stuff. Everybody's just frightened to make a decision, and that in itself is a desperate state of affairs. But yeah, you can see that what's going on there with the FTSE. The DAX, now, if those of you who joined me last week, I was saying that, I was very surprised by how DAX had bounced so strongly off the levels. Okay, we'd been beneath the 20, put in a couple of wicks, and then had just launched ourselves higher, which you can see here. This is the daily chart, and we'd looked at this, now, of course, it's always easy in hindsight. You can say, well, oh, Paul, that was clearly an inverse head and shoulders, and we should have just brought that to the moon. And it's always easy in hindsight like that, isn't it? I just saw that as just basically price going sideways, which in itself is very rare. But you can see, bang, we popped up. I had some short swings on here, okay, at the end of last week, because it just basically started to roll over and what have it. But I didn't realize it was going to drop the way it did. But you can see for yourself there, that is in itself another kind of daily evening star formation on there. Yep, we've gapped up on a bit, but I wouldn't exactly say there's been much of a follow through as yet. They'll be waiting to sort of take some sort of lead from either a Trump tweet or a Besant comment or or markets themselves and stuff. So yeah, that's what we see there with that. But of course, the tantrums in equities and indices, as you know, has been another boon for gold. So we look at the weekly chart. That's just one-way traffic. And as I said, I'm going to be doing the Monday Market Max webinar on how to trade gold. Okay, at 2 o'clock London time. Okay, I can sum up long-term trading gold. And that if there is a trend in anything, don't fight it, ride it. Simple as that. Go down to the daily, you can see that we had a little bit of a tantrum there, but it's worked its way. We can see that basically even this week, we've worked our way higher to new highs. All right, we'll see how we close in the day, but that in itself is telling you that's quite something. And joined in that is, of course, silver, and you can see for yourself there, bang, bang, bang. Silver's just on a tear there, isn't it? And I can't help but think that this is going to break things if it isn't already, simply because for so long we were sub 30, well in fact sub 20 really, but in the last year 18 months we've just accelerated away, and I can't help but think that that will break things. And we'll wait and see. Talking of what hasn't broken is Bitcoin. Bitcoin had an interesting week last week, as in this is the weekly chart. It traded to its new all-time highs there. Okay. As you can see, 120,000. We traded up to there on the daily chart, and then bang, you can see what happened over on the Friday. We collapsed everything, pretty much any risk on that. Asset just got hammered, and so we went from 126,000 to kind of finishing the week at about 112. All right, and we popped a little bit lower, but we've come back up, fill that gap. Can it follow through? That's the thing. All right, everybody's going to be sat. If I go to the 4-hour chart, see how it gapped down, put in an inverse head and shoulders there, left shoulder, head, right shoulder, popped up, hit that, the 20 and the 200. Okay, there you go. That's nice. Can it? It needs to get above that. It needs to get above that 4-hour 200. All right, to basically give me some enthusiasm, and then above 120 in the 4-hour 50 to convince that basically risk on mentality is back. Wait and see with that. Watch and shoot. All right, so there's that. Let's see if I can get US dollar up on here, whether it takes an age. As I said, I have so many like AI packages running and so many charting packages running and stuff that basically it seems to, as soon as I try and do a live presentation or a live stream, it kind of slows everything down, puts everything into into the sort of the dullness of the day and stuff. But what we'll do is I appreciate we're going to overrun a little bit today, but there's lots to talk about, lots to cover. Let's see if we can have a look at the daily and have a little look at some of the dollar and some of the others, and we'll switch off. So here we are. Right, dollar index. The dollar profiles. We've got Aussie dollar on the daily, Kiwi dollar on the daily, Euro dollar on the daily, dollar CAD on the daily, cable on the daily, dollar Swiss there on the weekly, dollar yen on the daily, and the dollar index. Okay, so let's start with dollar index. Bang. Dollar index, as I said last week, was a good week, even though it kind of came off on Friday. That's still a strong week, and we've talked about this for the last few months, hasn't it? That basically we were beneath, being suppressed by that weekly 20. We've flipped the 20 there. It's PO20 going on there. All right, and lows higher, lows higher, lows are higher, lows are higher. Okay, so if we go down, let's actually go into the 4-hour chart, because we can see we started off with a good week, and then we sold off a bit, but we're working our way up a little bit into that gap, into that imbalance. Let's see if that continues. Okay, but there is that little bit of dollar strength still there. Look, you can see it there. Hence why it's climbing up the STAM. And interestingly, remember, Swiss franc is top of the pile, but even the Swiss franc is basically starting to weaken a little bit against the dollar. We can look at here. My thing is playing up here. So the euro against the daily, even though euro is second in the STAM, you can see that basically it's weakened against the US dollar. Aussie has weakened against the US dollar. Kiwi has weakened against the US dollar. Canadian dollar has weakened against the US dollar. Japanese yen has weakened against the US dollar. Sterling has weakened against the US dollar. So you can get an idea of what's going on there. If there is dollar strength there at the moment, even after Friday, the question is, how strong is it and how much will it flow through and how much will it disrupt? So that's the thing, that kind of dollar strength is there. Okay. Certainly at the moment. So I wouldn't look to fight that particularly. All right, let's what I've got here. Yeah, Japanese yen. We'll do quick Japanese yen just to really to basically to see what we saw. As I said, we can see that dollar has been strengthened. Yep, Friday was a bit of a bearish engulfing key reversal candle, but we'll have to see. But what we have seen is basically is that it's kind of an interesting week. So we start the week with gapping up and running yen strength against the euro, and then we basically a euro strength yen weakness. But then as the Friday shenanigans happen, we basically get a little bit of yen. So even with that weakness, all right, in yen, there is still that basically that kind of safe haven. And look at, the Aussie dollar one was a nice one. I was watching it. An awful lot of them did that kind of if you look at the sort of charts for kind of Thursday, Friday, an awful lot of them did pumped up, basically put in a bearish pin bar and then reversed on Friday quite strongly. And that's kind of the Aussie yen. That is a risk on, risk off trade. And you can see you start the week in risk on mode, we ended the week in risk off. And now it's a case of, well, which is the sentiment that is going to lead? All right. Which is the sentiment? Are we going to be risk on or are we going to be risk off? At the moment, I'd say people are risk off. I certainly, would sense that myself, even though we've had a bump this morning. The question will be, what does Trump and what does China come out and say? Basically, that's what we're waiting for, to see if whether this was just a spat literally, or is there something deeper going on that we need to be aware of? All right, let's have a quick finish about sterling. Listen, as we said, sterling on the daily has been weakening against the US dollar. Did the pound yen did the same. Started risk on, ended the week risk off. Pound against Swiss francs here, it's just kind of just really for the last few weeks, just mincing around. Euro against sterling. Okay, euro weakened against sterling, but it's holding above the 50. Look at that pound Aussie. Okay, that was a lot of that. It was basically Aussie. And if you look at the Aussie charts, Aussie got battered on there. Pound is kind of weakened against the Canadian dollar over the last couple of weeks, but it's bouncing off the 50. And if you look at even pound against New Zealand dollar, it's been kind of messy over the last week. So as I said, sterling's in the middle of the STAM, and it's a mess at the moment. Okay, it is a mess. There's a little element of strength against some things, but really, ultimately, there isn't really any strength in any kind of depth across the board. Okay, hence why trading it becomes a little bit challenging, and also even on an intraday basis, okay, it's not always clear. As I said, in the FX market and in swing trading, I want to basically buy strength and sell weakness. So when something's in the middle, right, when it's doing what the sterling's doing at the moment, I kind of lose interest in it a little bit because it's just I'm here for the easy pickings. Okay, I'm not here to be a hero. I'm here to just try and basically surf the best trends. Okay, and where the momentum is. All right, ladies and gentlemen, let's draw it to a close there. I hope that has given you a little bit of help. I hope that's given you a little bit of insight that you can take away. It is going to be a very interesting week. There's going to be a lot of twists and turns this week. So make sure you're on top of the news flow. Make sure you're on top of your risk management. Make sure you're on top of your order flow. Have a fabulous trading week, everybody. And I will speak to you soon. Many thanks. Cheers.